Welcome back to the deep dive. It is Tuesday, January 27th, 2026.
And today we are digging into a part of the tech world that often gets overlooked.
Yeah, the plumbing, the actual physical stuff. We're talking about Seagate Technology.
Spinning rust, as the cynics used to call it.
Right. And I have to admit, when this earnings report first hit our stack, I had that same thought. Hard drives. In 2026.
With everything moving to flash SSDs, you'd think they were archaic.
Exactly. But then I actually read the Q2 numbers that dropped, and I realized my entire mental model was just completely out of date.
It's a super common misconception. I mean, our laptops use solid state, our phones use solid state, so we just assume the whole cloud works that way.
But the physics of it tells a very different story.
A very different story, and that's what we're here to unpack.
Because while everyone is obsessed with the AI chips, the brains of the operation, there's this physical reality to the cloud that is, it's breaking records. We're talking about the industrial machinery needed to store the AI revolution.
That's the perfect way to put it. You can have infinite compute, but data has gravity. It has weight. And you need somewhere to put it.
And what we're seeing in Seagate's Q2 results isn't just a good quarter.
No, not at all. It's the end result of a decade-long bet on reinventing physics to keep up with that data gravity.
So that's our mission today. We're going to parse this reinvention. We'll look at the numbers, which are, frankly, staggering. Revenue up 22%.
But more importantly, we need to understand why. Why is it that if you're a cloud provider, you literally cannot buy a slot for their best drives until 2027?
That fully allocated detail is it's the most important signal in the whole report.
It really is.
Okay, we'll get to that supply shock. But first, let's just lay the groundwork, the financial results.
Let's do it.
So Seagate just reported their December quarter. Revenue hit $2.83 billion. That is a 22% jump year over year.
Which for a mature hardware company is just massive growth. You're usually fighting for single digits in hardware. This kind of surge means something fundamental has changed.
And it wasn't just volume. They made a lot more profit on what they sold. The non-GAAP EPS, earnings per share, came in at $3.11.
And Wall Street was expecting, what, $2.77?
Yeah, $2.77. So a huge beat.
It is, but if you really want to see the health of the business, you have to look at the gross margins. That's the real story.
Non-GAAP gross margin hit 42.2%.
Up from about 40% just last quarter.
So for anyone listening who doesn't live inside a spreadsheet, contextualize that, 42%. Why does that matter so much for a company making, metal boxes?
It signals pricing power. For the last 2 decades, hard drives were a race to the bottom, a commodity game.
Who can make the cheapest bucket for bits?
Exactly. The margins were razor thin. If you raised your price by a penny, your customer would just go to the competition.
And now?
When you see margins expanding like this, operating margin was up almost 290 basis points sequentially. It tells you that whole dynamic has flipped. Seagate isn't selling a commodity anymore.
They're selling a scarce resource.
A high-tech, scarce resource that the Amazons, the Microsofts, the Googles of the world are willing to pay a premium for. They need this specific tech.
Because they have no other choice.
Because the alternative is running out of space. And when you're a cloud provider, out of space means out of business.
And they're turning that leverage into, a financial fortress. Free cash flow was $607 million.
The highest in 8 years.
And they immediately used it to retire $500 million in debt.
Right. They brought their net leverage down to 1.1x. They're sitting on over $1 billion in cash. And that's crucial because the tech we're about to get into, this HAMR tech, it's expensive to develop.
So this gives them the runway to keep pushing the science.
Exactly. It lets them keep investing without Wall Street breathing down their necks about debt.
Okay, so the financials are solid. Let's pivot to the operational reality. You mentioned supply is tight, but listening to the call, tight, feels like an understatement.
It's severe. It's the kind of tightness that keeps procurement officers up at night.
Their CEO, Dave Mosley, he dropped this bombshell. He said they're nearline capacity.
Which is big data center stuff.
Right. That capacity is fully allocated through the entire calendar year of 2026.
Let's just pause on that. It's January? If you're a major cloud company and you realize today you need another 50 petabytes for a project in November, Seagate has to say no.
The factory slots are gone. You can't get a new order until 2027.
It's wild. And it gets crazier. They mentioned on the call that customers are already negotiating for 2027 supply and starting talks about 2028.
Wow.
Supply assurance is now their #1 priority. They are terrified of hitting a storage cliff.
A storage cliff. That sounds bad. So what is driving this insane demand? We're all taking more 4K video, but fully allocated for a year.
Personal use is a factor, for sure,
Yeah.
but it's a drop in the bucket compared to the two industrial engines. First, video. The YouTube stats they shared are they're mind-bending.
What were they?
YouTube is now seeing 20 million video uploads daily.
Wait, daily. 20 million.
Yes. And just 3 years ago, that number was 2 million.
That's a 10x increase in 36 months, and that's not even counting the resolution jump to 4K and 8K.
Right, which multiplies the file size. Every security camera, every dash cam, every influencer, it's all piling up.
Okay, but the report suggested video is just the baseline.
It is. The real accelerant, the thing that has people booking capacity for 2028, is AI. Specifically a term they used, agentic AI.
Right. We've done deep dives on generative AI, chatbots, and image makers. How is agentic AI different when it comes to storage?
So think of it this way. Generative AI creates content. Agentic AI does work.
It takes action.
Exactly.
Yeah.
These are AI agents that reason, plan, and make decisions to do complex tasks.
Yeah.
Optimize this global supply chain. Audit these 10 years of financial records.
So it's not just speaking, it's acting. It needs a chain of thought.
And to reason, you need context. You can't plan for the future if you don't understand the past. Agentic AI needs constant access to massive, massive volumes of historic data. The corpus.
Ah, okay, so it's not just read the prompt I just typed, it's look at everything this company has ever done.
Precisely. And that everything lives in what's called the mass capacity tier of a data center.
Which is not flash memory.
No. The hot tier, where the immediate thinking happens, that's super fast, super expensive flash and RAM. But the history, the memory, the exabytes of raw context, that sits on hard drives. It would be economically impossible to store it all on flash. It would literally bankrupt the cloud providers.
So as the AI gets smarter, its need for long-term memory just explodes, and that memory lives on a spinning disk.
Correct. There was this great quote on the call. A major cloud customer called these drives engineering marvels. We think of them as old tech, but they're not.
Well, let's get into that engineering, because this isn't my old beige desktop computer from 2005. The report talks a lot about HAMR, H-A-M-R.
Heat-assisted magnetic recording.
It sounds like something out of a sci-fi movie, but this is the tech enabling all this. So why do you need heat to store data?
Okay, so it all comes down to basic physics. To get more data onto the same size disk, you have to make the bits of data smaller.
Squeeze them tighter together. Makes sense.
But you hit a wall. It's called the superparamagnetic limit. Basically, if you make the magnetic grains too small, they become unstable at room temperature. They could just randomly flip.
So your 1 becomes a 0.
And your data is corrupted, it just evaporates. Catastrophic.
Right.
So to solve that, engineers created new materials for the disk that are incredibly stable, really hard to flip magnetically.
Okay, so problem solved.
Well, no. Because the material is so stable, so hard, the standard write head on the drive couldn't actually change the bits.
It's like trying to carve a diamond with a plastic spoon.
Perfect analogy. You can't make a dent, so the data is safe, but you can't actually write it.
A locked vault.
Exactly. And that's where HAMR comes in.
The heat.
The engineers realized if you heat this material up for just an instant, its resistance drops. So Seagate built a drive head with a nanoscopic laser built right into it. A photonic writer.
A laser on the drive head.
A tiny, tiny laser. It heats a microscopic spot on the spinning disk to over 400 degrees Celsius for a fraction of a nanosecond. That softens the spot just long enough for the head to write the bit that it cools instantly, locking the data in place.
That is just, it's mind-blowing. The disks are spinning at thousands of RPMs and you're shooting lasers at them at the nanoscale with perfect timing.
It's effectively magic. It mixes mechanical engineering, material science, photonics, and the fly height. The distance between that head and the spinning platter is less than 2 nanometers.
2 nanometers.
A strand of your DNA is about 2.5 nanometers wide.
Wow.
It's like a Boeing 747 flying a few inches off the ground at supersonic speeds without ever crashing for 5 years straight.
And this isn't some lab experiment anymore. This is what they're shipping.
That's the huge news from Q2. Their Mozaic 3 platform, which uses this HAMR tech, is now qualified with all the major U.S. cloud providers.
So Amazon, Google, Microsoft, they've all signed off on the laser drives.
They're deploying them. Seagate shipped over 1.5 million AMR units just in this quarter. The ramp is on.
And these Mozaic 3 drives, what capacity are we talking?
That's the 3 terabyte per platter drive, With 10 platters in a drive, that's a 30-terabyte unit.
And they're not stopping. The report mentioned Mosaic 4.
Right. They're already qualifying the next generation. That's 4 terabytes per platter, so 40-terabyte drive. And their roadmap goes out to 10 terabytes per platter.
Which would be a 100-terabyte hard drive.
Early next decade, yeah. A 100-terabyte drive.
I remember thinking my 1 gigabyte thumb drive was the pinnacle of technology.
We all do. But here's the key strategic point for you listening.
Yeah.
This AMR tech is incredibly hard to pull off. Seagate calls it a durable competitive moat.
A barrier to entry.
A massive one. The complexity is so high that a competitor can't just decide to catch up tomorrow. If you haven't been working on this for 15 years, you're not going to have it.
And that protects those 42% margins we talked about.
Exactly. Their main competitor took a different technical path for a long time. Pivoting isn't something you do overnight. So for this specific density, Seagate is really the only game in town.
Speaking of strategy, let's talk about their operational discipline. I got the sense from the call that they've really changed how they run the business.
Oh, completely. The days of just building inventory and hoping someone buys it are over. They have a strict build-to-order mindset now. The factories are running tight.
And they said they aren't even increasing the number of units they make, right?
That's the key. They're meeting this massive demand growth through areal density, not by building millions more physical units.
So explain that. Why does it matter if they sell more drives versus denser drives?
Well, a new factory costs billions and takes years to build. Instead of doing that, they're just making the drives from their existing factories hold more data. If you double a drive's capacity, you satisfy twice the demand without making a single extra unit.
So your manufacturing costs stay flat, but the value of the product doubles.
Brilliant for cost control. It breaks the link between revenue growth and capital spending.
And it creates price discipline.
For sure. Since they aren't flooding the market, the revenue per terabyte is stable to slightly up. Customers get that if they want the best density, which saves them money on power and space. They have to pay for it.
The total cost of ownership argument, TCO.
Right. And the math checks out. The average capacity per drive sold to the cloud is now almost 26 terabytes. That tells us that customers are ripping out their old 12 or 16 terabyte drives to replace them with these new ones.
But why do that before the old drives fail?
Power and space. If I can replace two 12 TB drives with one 30 TB drive, I've just cut my power consumption for that data in half, and I've freed up a slot in the rack. In a world where data centers are literally fighting to get enough electricity from the grid, that power saving is worth a huge premium.
So the hard drive is actually an energy efficiency play now.
It is. Seagate isn't just selling storage, they're selling power efficiency.
It's a win-win as long as Seagate can make enough of them.
Which brings us right back to being fully allocated.
Okay, so let's look ahead. We know 2026 is sold out. What does the guidance look like? Does the party stop in Q3?
Doesn't look like it. The momentum is accelerating. Their guidance for the March quarter is revenue of $2.9 billion, give or take.
So that's up again from the $2.83 billion they just did.
Yep. At the midpoint, that's a 34% year-over-year improvement. They're expecting EPS to rise to around $3.40.
And for the rest of the year?
The big picture is that management sees sequential growth in both revenue and profit for the rest of calendar 2026.
So every quarter this year is expected to be better than the last one.
That's the projection. And it makes sense. If you're sold out and you're moving customers to higher-priced, higher-density products, the math just works in your favor. They're sitting on a backlog that gives them incredible visibility.
It really is an incredible turnaround story. I mean, tech hardware is a brutal business. People were writing obituaries for the hard drive just a few years ago.
They were dead tech. They said it would be tape for archives and flash for everything else, but they underestimated the sheer weight of the cloud.
The cloud is heavy. I think that's the phrase I'm taking away from this.
It is. We use these terms like cloud, virtual, cyberspace, but physically the internet is just rows and rows of spinning platters heated by lasers humming away in a concrete building. Seagate is now the landlord of that physical reality.
So let's synthesize this for everyone listening. We started this looking at a legacy tech company, and what we found is a business that has effectively cornered the market on a raw material for the next phase of AI.
That's it. From legacy component maker to critical infrastructure provider, this HMR transition was a huge, huge gamble. It took decades of R&D, billions of dollars. And this Q2 report is a confirmation that the bet paid off. It's not a science experiment anymore. It's a mass production reality generating massive cash.
And for you listening, the so what is pretty direct. The next time you use an AI tool or upload a Forte video, You are interacting with this technology. You are spinning a nanoscopic, laser-heated disk in a rack somewhere.
The cloud isn't magic, it's engineering. And right now, that engineering is running at 100% capacity.
Which leaves us with a final thought to chew on, and this one's been bothering me a little bit.
What's that?
If demand is fully allocated through 2026, and cloud providers are already worried about 2028, and AI data generation is growing exponentially, are we approaching a data storage cliff?
That is the multi-billion, maybe trillion-dollar question.
I mean, what happens if we generate AI data faster than we can physically manufacture the incredibly complex devices needed to hold it? Does storage just become unaffordable? Do we have to start deleting things?
It forces a choice. We either value data much more highly and pay a lot more to keep it, or we stop keeping everything. We might have to shift from a save everything forever mindset to a curated history one.
But right now, no one wants to delete anything.
No one. Everyone wants to feed the AI. And to do that, you need the history.
And as long as they want to feed the AI, the disks will keep spinning.
And Seagate will keep selling every single one they can possibly make.
A fascinating look at the hidden engine of the AI boom. Thanks for walking us through all that.
Always a pleasure.
And thank you for listening to The Deep Dive. We'll catch you on the next one.